Welcome to Let Me Fix This. Enjoy the video.
In this video, I will explain how to make quick profits in the stock market. First, it's crucial to understand that quick profits often come with higher risks, so careful planning is essential. We'll explore strategies like day trading and swing trading, which aim to capitalize on short-term price movements. Remember, successful quick trading requires discipline, a solid understanding of market dynamics, and strict risk management to protect your capital. Let's dive into the key steps to get started. Day trading involves buying and selling stocks within the same trading day, aiming to profit from small price fluctuations. Look for stocks with significant news or earnings reports that can create volatility. Employ technical indicators like moving averages and Bollinger Bands to identify entry and exit points. Always use stop-loss orders, perhaps around a 1% to 2% risk per trade, to protect your capital from unexpected market moves. This strategy demands constant attention and quick decision-making. Swing trading involves holding stocks for a few days or weeks to profit from larger price swings. This approach is less intensive than day trading, allowing for more time to analyze market conditions. Focus on identifying stocks that are at the beginning of a new trend or showing signs of a reversal. Use support and resistance levels to determine optimal entry and exit points. Consider risking no more than 5% of your portfolio on any single swing trade to manage overall risk effectively. Effective risk management is paramount for making quick profits in the stock market. Always define your maximum loss per trade and adhere to it strictly. Avoid chasing trades or making impulsive decisions based on fear or greed. It's vital to maintain a trading journal to track your performance and learn from both successes and failures. Remember, consistency and discipline are far more important than any single winning trade for long-term success.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.